Now is Jordan Kimmel, market strategist for First Montauk Securities. Good morning.
Good morning, Jim. Good to be here.
Good to have you. As we just heard in our business report from Allison Stewart, a new ABC News poll shows that consumer confidence has dropped dramatically, the lowest in 11 years. Many consumers fear that we're headed toward a recession. Are they justified in feeling that way?
Well, there's no doubt that there's been a real drop in the net worth of a lot of the high-velocity money or the under 50 investors. So the consumer represents about 2/3 of the driver of the economy, and it's been steadily dropping for several months right now, the consumer confidence. So there's no doubt there's going to be lower spending. I think that the engine of business is really going to be there. So I think we're going to be a slowdown and not maybe a real recession coming in.
Are we in a bear market?
Well, you know, there's been a real severe bear market in the technology sector, and that's where a lot of the money has come in the market in the last 3 to 5 years. So the overall market is healthier than it has appeared, and even last year more stocks went up than in 1999. But the big stocks that make the big indexes up, the Cisco's, the Intels, they've been in a steady drop, and they have been in a severe bear market.
So for those people who might be considering pulling a lot of their money out of the stock market, what would you say to them?
Well, what I think you really need to do is look a little bit deeper. We're seeing more stocks, frankly, trade above their moving averages than we had in years. So I think what's finally happening, a lot of money's moving out of the large cap market into the smaller and the mid cap market. And right now the S&P, take out a couple of the technology stocks, trading about 14 times earning, historically low. So I think that the first half of the year, the market's going to be better than most people expected, but I do think most of the gains of the market are going to come in the first half of the year.
Now, the Consumer Price Index report came out yesterday. What do you make of it?
Well, what I see happening is you're seeing 2%, 2.5% inflation. That's no big deal. That doesn't have the Fed worried, but you also have steady growth going on. You have full employment. The industries drive down their costs. It's a truly deflationary event, but we're seeing 2% growth. It's actually a very steady, not a 6% growth the last year. 2% growth, I don't think anyone's going to complain this year.
So not a whole lot of reason to be concerned.
Well, you know, I think the concern phase just ended, frankly, and I think that we put out a piece saying that we thought that the market was making a bottom, and I think it did. I think the money will not be made in the large cap tech stocks right here. But I think a lot of good money will be made, and I think investors have pulled in their expectations from 30% to maybe 12, 15%, and I do think that's on the table this year.
Mr. Kimmel, thank you for joining us. Jordan Kimmel, market strategist for First Montauk Securities. You can get the latest